Hi everyone, it's your boy again, Adekola, and I'm here with another opportunity to take advantage. I'm here with another opportunity for us to take advantage of the current dip in the stock market. And so, everyone watching this, please don't take it as any financial advice or so, and make sure you do your proper research before investing. And as you know, we are just starting out this YouTube channel, so you can help us grow by liking, subscribing, and please make sure you subscribe and like this video. Thank you. So let's dive into the main content.
Investors are unsure of which equities to bet on as the summer season kicks off in a bear market and the prospect of a recession looms. Despite the fact that the expert community forecasts more volatility in the near future, it also believes that this summer will see a rally in stock prices, even if simply as a result of normal seasonal variations. You should keep an eye out for investment opportunities across a variety of industries. What you need to know if you want to buy stock in 2022 is listed below. Stock trading is inherently risky, and the users agree to assume complete and full responsibility for the outcomes of all trading decisions. Top 10 stocks to consider in 2022. Before we dive deeper into which stocks you should be buying in 2022 and why, here's a quick rundown of the top contenders. All statistics are current as of June 20, 2022. 1. Lithia Motors Incorporated LAD. A U.S. car retailer named Lithia Motors runs 278 locations and sells goods on 300 websites. Lithia conducts auto maintenance and repair services, sells parts under the brands Driveway and Green Cars, and sells new and used domestic, foreign, and luxury vehicles, as well as related financial, warranty, and insurance services. The business caters to both buyers and those priced out of the market who must fix their current vehicles rather than buying new ones. A stock that pays dividends is Lithia. With a price-to-earnings ratio of 6.43, LAD is currently value priced and is rated a strong buy by analysts. 2. Travel Plus Leisure Co. TNL. Travel Plus Leisure, formerly known as Wyndham Destinations, is a provider of hospitality-related goods and services that runs segments for vacation ownership, travel, and membership both domestically and abroad. In the first quarter of 2022, travel resumed, resulting in timeshare sales per visitor records for the corporation. Over the previous year, revenue increased by 35%. The company is given a strong buy rating by analysts, who have set an average price objective of $75.13. 3. Mueller Industries Incorporated 3. MLI. In North America, the UK, the Middle East, and China, Mueller Industries produces and markets plastics, brass, copper, and aluminum. In 1917, the Tennessee-based business was established. Among its business segments are plumbing, industrial metals, and environment. The Mueller shares have been comparatively constant thanks to a successful first quarter, and experts believe the short-term prognosis is promising. Given its low 5.13 P/E ratio, they offer the stock a buy rating and claim that it is cheap. 4. Fourth Bancorp, FBP. The parent company for First Bank Puerto Rico, which offers services to retail, business, and institutional clients, is First Bancorp. The business has recently produced strong quarterly and yearly earnings and revenue performance, and the stock now pays a higher than average dividend yield of 3.66% following a 20% raise announced in April. FBP is rated buy by analysts. Their typical target price is $22.83. 5. Herc Holdings Incorporated, HRI. Aerial equipment, air compressors, compaction, earthmoving and material handling equipment, trucks and trailers, and lighting equipment are all rented out by Florida-based equipment supplier Herc Holdings. In addition, it offers labor, training, equipment maintenance, and repairs. Shares may be trading up to 42% below their true value, according to an analysis from Simply Wall Street in April. The stock has a strong buy rating and an average price target of $198.88, according Yahoo Finance. Make sure you take note of this. To measure stock performance, analysts and investors should take into account the stock's potential and ability to increase its shareholders' wealth during an estimated period. Here are some of the best performing stocks to keep on monitoring throughout 2022. 6. Devon Energy Corporation, DVN. Due to its great financial performance, capital return for shareholders, and geopolitical circumstances that sent energy stocks skyrocketing, this company's stock price has lately increased. Devon revealed earlier this month that it had reached an agreement to buy leasehold interest and other assets from Rimrock Oil and Gas. According to Zacks Investment Research, the acquisition will add more than 100 undrilled inventory locations and over 15,000 barrels of oil equivalents per day to Devon's Williston Basin production. The price of Devon stock has increased 123.47% in the last year and 31.71% since the year's beginning. 7. Marathon Oil Corporation, MRO. Since the start of the year, shares of this stock have increased by more than 47%, while the Dow and S&P 500 have declined significantly. Undoubtedly, the fallout from Russia's invasion of Ukraine contributed to share prices reaching just below their 52-week high before declining somewhat in June. The short-term energy outlook is very uncertain, according to the U.S. Energy Information Administration, but analysts still recommend buying MRO. The strategy includes measuring fundamental business metrics against the stock price with the hopes the price will rise alongside the company's worth. 8. Qualcomm Incorporated, QCOM. Qualcomm is a major player in the wireless industry, as well as a market leader in 5G and chipsets. While it is not without competition, Qualcomm is a blue-chip stock with a 10-year history of increasing dividends, and analysts believe it is currently significantly undervalued, trading at 12.39 times earnings. Analysts at Zacks Investment Research anticipate a 49% increase in earnings per share this quarter compared to the same quarter last year, and a 46.8% increase for the fiscal year. QCOM is a steal at around $120, compared to its average target price of $202.67. 9. The Berkshire Hathaway Incorporated, BRKA. It may seem counterintuitive to consider the world's most expensive stock a good buy, but consider this: insurance company, and the purchase of a 15% stake in Occidental Petroleum, which Barron's says investors love, bode well for patient investors. Of course, most will have to buy a fractional share of the roughly $400,000 stock or pick up budget-priced Class B shares. Berkshire Hathaway is a holding company for companies representing dozens of brands in industries ranging from insurance to freight rail transportation to utilities, furniture, confections, batteries, and recreational vehicles, to name a few. It is led by one of the world's most successful value investors. Berkshire Hathaway shares are down more than 10% since the beginning of the year and more than 2% from a year ago. However, according to Seeking Alpha, the company has plenty of cash to gobble up growth stocks and buy back more shares. Earnings diversification, excellent management, and a recent spending spree, a deal to acquire Allegheny. 10. Micron Technology Incorporated 10, MU. Micron stock has fallen in value over the last year, but it checks a lot of boxes as a value stock: low price-earnings ratio, high earnings per growth forecast over the next year to 5 years, and a target price at least 50% higher than the current price. Yahoo Finance polled analysts, who rated the stock a buy. In a price range of $70 to $165, their average price target is $108.54. The Street's Real Money columnist Stephen Sarge Guilfoyle believes that demand for what Micron does will outpace supply and or capacity for some time. Guilfoyle said of Micron's financials, "The balance sheet is as clean as a whistle and gets high marks on the Sarge test." Final take. The stock market is in constant evolution, and those looking to invest need to pay close attention to its frequent ups and downs. When looking to invest in new stocks and diversify your portfolio, do your research and evaluate what's best for you in the long run. The guide above is meant to give you some insight into some of the best options in the stock market nowadays. Be aware that these conditions may vary over time. Good to know. Experts recommend investing in stocks over bonds if your goal is growth and you have a strong appetite for risk. Although stocks are more volatile than bonds, historically, they have produced larger long-term gains. If investing in individual stocks is too risky for you, consider a mutual fund that invests in a basket of growth stocks.
Thank you all for watching this wonderful video, and I highly appreciate you. Please make sure you like and subscribe and as well share.